welcome to a new video. Today, following the trend that I have been following of analyzing renewable energy companies, I am bringing to you the company NextEra Energy. But before we go into the video itself, let's go and quickly see how will I structure the whole video. So firstly, as always, we will start by analyzing the company itself. What is it that NextEra does? Secondly, we will be going into the stock price and seeing how it has been performing. Followed by the financials, so we'll be looking at the balance sheet, income statements of the company, and finally I will be giving my overall opinion on the stock and my future plans with it. Nevertheless, I would like to take the chance also to remind you that I'm no financial advisor and that everything I will be showing in this video will be just, my opinions, my future plans with the stock, and that you should always do your own research whenever investing in the stock market. But with that out of the way, let's get started with the video. NextEra Energy is an American company with headquarters in Florida, and actually the company itself is it's composed of 3 different companies, 2 energy companies operating just in Florida, and a third one which is kind of like their clean energy producing business, in which they have much more of a renewables play. Going first into the electricity companies, we have that the largest one is Florida Light and Power Company, which we will actually refer to as FLP, which serves more than 5 million customers. And this is followed by the Gulf Power Company, which is actually one of the recent acquisitions of NextEra Energy. Just acquired it on January last year, 2019. And this one is roughly serving around 470,000 customers, and they are mostly located in the northwest of the state of Florida. And finally, the clean energy producing business is named NextEra Energy Resources, and it happens to be the world's largest generator of energy coming from the wind and sun. And finally, to end with introduction, if we check their portfolio that dates back of end of last year, 2019, we can see that they have in total 51,500 megawatts of generating capacity distributed across 48 states in the US and 4 provinces in Canada. And in total, the company currently employs around 14,800 employees. But now let's go and dig deeper into the company to see how much or how many of the assets that they own are really targeted towards renewable energies. So checking NextEra Energy generally, including the different companies, we can check the last column, which is the one that corresponds to this past year, 2019. So considering that the company is considered to be a renewable energies play, we see that in fact, out of all the megawatts of energy that they have installed, they only have 34.84% of all of them coming from wind, sun, and gas from landfills. And the other 65.16% are still based on mostly nuclear, followed by gas, coal, and oil. Personally, after having seen the data that we just saw, I would honestly like to see much higher percentages of renewable energy production, and especially considering that in the market it is considered to be a renewable energies play. Nevertheless, I guess that for that we'll have to wait a little bit. But now I would like to divide what we have just seen into the 2 biggest companies that it has, with on the one hand we have the Florida Light and Power Company, FLP, and on the other one the NextEra Energy Resources. In the graph in the screen we can see how FPL at the end of 2019 had 75% of its energy coming from natural gas, 22% from nuclear, and a ridiculous 2% from solar. Nevertheless, going back to 2001, we see that they have at least reduced oil, coal, and purchased power, which this purchased power was probably coming also from non-renewable sources. And the cool thing is that looking into the future, by 2029, they expect to have 16% coming from solar energy. Of course, this is still not ideal, but it is something. And also considering that this is not the renewables branch of their business. Now let's go and check the renewables one, which is NextEra Energy Resources, as we said before. And in this specific one, looks actually much better, and we see that 75% of the total production is coming from wind and solar, with the rest being nuclear, gas, and oil. And also in the map we can see how they are distributed across North America. Closing this part of energy sources, I must say that I'm a bit disappointed with how much of their energy is coming from nuclear, gas and coal, which are of course non-renewable sources. And as I said before, this is considered to be a renewables company. Imagine other more traditional companies within the same sector. In any case, there might actually be good news for the energy sector because according to NextEra Energy, the potential cost for each megawatt installed post 2023-24 could actually become even cheaper for wind and solar than other non-renewable sources. And we will of course have to see how it evolves, but if these projections confirm, we could see an even higher increase in renewable energies because even traditional companies would turn into renewables just for the fact that they would be more affordable. With all of this of being renewable, I would like to end this specific section with seeing a graph which shows the CO2 emissions rate for each megawatt installed, and we can appreciate how NextEra Energy has been able to reduce it much more than the average of its competitors in the US. Not only that, but it actually has 46.5% lower emissions than the average of its competitors. Alright, so now we have an idea of what is it that NextEra Energy does and how it is positioned in the market, so let's have a look at the stock itself. NextEra is trading under the ticker symbol NEE in the New York Stock Exchange, and at the moment of recording this video, its price is of $278.50 a share, with a dividend yield of 2.02% and a payout ratio for this past quarter's dividend of 53.84% according to CSI Market. The dividend is not incredibly high, but we need to consider that they have been paying it and increasing it for 25 years in a row. Not only that, but they have an impressive average increase of almost 10% annually, which is really nice for a dividend investor like me. And moreover, we see that the stock has been performing very well since its inception with a clear uptrend. Now, let's go into the financials as usual to get an even better picture. But before doing that, I would very much appreciate if you could hit that like button. It is super simple and you would make me super happy. Alright, so in terms of financials, we will be looking at the earnings report of Q2 2020, which I already advanced that I don't really like how they displayed the data, since they have put tables of 1 year versus the other separately, which makes it much harder to compare. Nevertheless, firstly looking at the balance sheet, we see that they have a debt ratio of 65.67%, which is conservative. And in terms of income statements, we have that for this past quarter, they reported a net profit for the company overall, including all the sub-companies of $1,275 million. And this is slightly more than on the same quarter the previous year, 2019, in which they reported profits of $1,234 million. So we see that even in a period of recession, they have been able to increase net profits by 3.32%. And now looking at general figures historically, we see that during the past 4 years, they have been reporting relatively stable net profits, with a decline in 2019 being mainly due to the acquisition of the Gulf Power Company. Moreover, in terms of assets, they have increased them massively, proving that they are investing a lot in their future. More concretely, they have had an increase of 30.05% in assets since 2016. And now, after having seen many different aspects of the company itself, it is time for me to give my opinion. As you know, or if you didn't know, I'm a very big fan of renewable energies. Seeing one company that invests in it is certainly something that interests me. Considering that the segment they are in has a very bright future, that they are very well positioned as being the world's largest generator of wind and solar energy, that their financials are looking great, and that they have had an average historical increase of 10% annually in their dividends, I certainly consider this stock as being one that I must have at least in my own portfolio. And although, as I said, I really don't like the fact that still so much of their energy is coming from non-renewable sources, I understand that they cannot just do a transition like this and that this has to be done gradually. So hopefully in the next years to come, we will see an even higher increase in these type of energies. Finally, if you are planning on investing in these stocks, just bear in mind that it is very hot at the moment. Currently, its price to earning ratio, it is at 36.7 times earnings, while during the past 10 years it has been trading at an average of 17.1 times earnings, which might show that it is quite overvalued. So if you're looking to make a quick profit, I would not advise you to get into the company, but as a long-term play, I certainly think that it has the potential to grow, specifically considering the renewable energies, and this is the main reason why I'm invested in the stock itself. Nevertheless, this is the end of the video. I hope you enjoyed it. If you did, then please make sure to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.